All right, boom. Now we live.
It's not full screen though, is it?
Oh, you don't even have to share it right now. I just wanted to make sure you have it up.
Okay.
But what's good, everybody? Another Sunday, we back up. Let me mute this.
For a good one. We are in store for a good one tonight.
Oh, it's a great one. First of all, let's just talk about how beautiful of a Sunday this is. I don't know where y'all are.
See, I was trying to.
The sun was shining all day today. You feel me? My son's birthday was yesterday. You know what I'm saying? A couple other things happened today that we may or may not get into, but if you know, you know. Lex knows. Let's put it like that. Lex knows exactly why today is a good Sunday. But you know, other than that, it's great to have another Sunday with y'all. We definitely got a good one planned for y'all today. We have another crypto related segment, more into the Metaverse, Web 3.0, blockchain. So it's a little branch off of the stock market, but it's definitely in the investment world, and it's becoming more and more relevant as a lot of people are making a lot of money in this space with this knowledge. So we definitely want to put y'all on game. We brought Lex and Sahib to the stage with us. Sahib, if you remember, is actually the inaugural Supplemental Sundays host. So we welcome him back with open arms. He got a camera this time, so y'all know he's not like a bot that we coded for the first Sunday. You feel me? So he gonna drop more knowledge on us. And I don't want to waste too much time. AJ, did you have anything before we get into it?
No, I'm excited about this one. So everybody get y'all's pen and pad ready. Let's hit it.
All right, take it away, y'all.
All right. So today we're going to talk about Web3, the blockchain, the Metaverse, and some NFTs, you know, all that good stuff. I'm Lex, and Sahib is back with us again. You can go to the next slide. So what is Web 3.0? You probably always hear people talking about Web 3 this, Web 3 that, and you're trying to figure out, okay, where do I buy Web 3? How do I get on Web 3? But in order to understand what it is, you need to understand Web 1 and Web 2 first. So Web 1 was like, think back in the day, like the dinosaur age. I'm gonna say that, I know it's some old heads in here, so y'all was probably young at this time. But Web 1 was back when the internet was really read only. Like you got on there to read somebody's grandma's recipe blog, or you might have been making your MySpace page and you was really coding it in HTML and you didn't even know you were coding. That's just how you did the internet back then. Like today, internet is dynamic. Back then it was just static. Like it was a page and that's it. Like if you see that picture, that's the image of a archived website of CNN from the year 2000. So it was real clunky. It was ugly. You weren't getting on the internet to go on Amazon, add stuff to your cart, and do all the extra. You were only on the internet to read, and if you were even on the internet, you might not even been on there yet. So what was Web 2? So Web 2 is currently what we're on. It's what you know as the internet today. It's more dynamic. We create content. We're on social media. We connect with each other. And we call this the read-write era of the internet. So we're not only just consuming information, but we're putting stuff out there too. But the problem with this is we've given up too much of our data. We have no privacy. These big tech companies like Google, Amazon, Apple, Facebook, they know everything that we do. So like my mom always used to tell me, if you put that on the internet, it's out there forever. And I used to be like, no, I can just hit delete. No, they have what are called forensic cryptographers and forensic analysts, computer forensic analysts that are able to pull everything that ever happened on a computer if they have the hard drive. So like, even if you delete it and you delete it off your computer, you think it's gone, it's still out there. And if you put it on the internet, it's still on somebody's web server, somebody's database. It's never actually gone, right? And most people don't understand that. So that's why you might see like don't be the police on the internet, because the internet is the police. Like if you're ever going to commit a crime, don't take your phone with you, because it's gonna tell on you, right? That's Web 2.0. So Web 3 is aiming to change that. So Web 3 gives the ownership of the internet back to the user, back to us. If you put something out there, there's a proof and there's validation that you own it. And it uses the blockchain to do that. So most people are like, what's a blockchain? Essentially, it's a decentralized network. So if I'm communicating with everyone on this Zoom, I'm doing it in a decentralized way to where Zoom doesn't own this information, but we own what we're putting out there. And it can be trusted by all because it's validated. So we'll go a little bit deeper into that. So what is blockchain technology? Blockchains are essentially like a ledger. So if I were to send a message to AJ on Instagram, Facebook owns that. They own that message that I've sent. Even if I delete it, they still own it somewhere on a server or on a database. But let's say I want to send AJ a message through the blockchain, and we can verify that through the blockchain. So if I send it to her, it's not owned by anyone. It's decentralized, completely ownership free, right? And anybody who uses that same blockchain, that same network, they can go and verify that I did that or that I didn't do that. And all users who use blockchains have the access to these files. So if I send some money to someone through Bitcoin or through any other type of cryptocurrency, it's stored on a ledger that's publicly viewed. So if you have a wallet address of mine, or you have the wallet address of the person who received those funds, you can go and verify that that information and that money was sent. And you can say, oh, that really did happen. And no one owns that data, so it's never going away. Once it happens, it's on the blockchain, it's stuck. Like it's up and it's stuck on there, that's it. And nobody can tamper or edit the blockchain. Like nobody can mess with the network. So if someone wanted to, if I sent a message on Facebook and Facebook wanted to shut down, they own that data. That's theirs, not mine. But on the blockchain, it's there forever. So there are a few different types of blockchains. You have permissionless and you have permissioned. And in permissionless blockchains, they're basically public. And that's what Bitcoin and Ethereum. And permission blockchains, you have private blockchains, basically, and it can be owned by one entity. You might have heard of Ripple, XRP. They're a private blockchain and they're controlled by one authority. And the difference between the two is public blockchains can take a little bit longer to send transactions because they're just public. There's so many people using them, and the way that they work, the technology works, it's slower. Versus a private blockchain, it might be instant, it might be fast. The transaction might be faster and validated faster, but they're also more vulnerable to attacks because they don't have that decentralized technology behind it. So one person is controlling it. So if they wanted to go in and edit what happened, they can change that. And that basically defeats the purpose of crypto. So you might see a lot of haters and people that are not a fan of certain coins because they're more centralized versus the decentralized aspect, which is the whole point. To try to come into the middle, they had hybrid and consortium, but consortium blockchains are harder to build because you need a big group to all agree on the same consensus and to all agree on how the network is going to work. And it really just isn't as feasible. It might as well just be public. And then hybrid is basically you have one owner, but they can't do everything. It's like having an administrator on your system, but they can't execute programs or something like that. But public blockchains is mainly where you'll find your bigger cryptocurrencies. So what is a decentralized consensus? I think of the consensus like the police, like these are the laws and this is how it's going to work. These are rules that make the blockchain go. And there are a few different, the main ones are proof of work, proof of stake, and proof of history. This basically shows how the blockchain, how the network communicates and validates that this transaction did or did not happen. So to go deeper into proof of work, this is the consensus that Bitcoin uses. So when you think of how Bitcoin is created, how it's added, how the technology works, you have what's called a miner. So essentially, you could think of it as like mining for gold, but it's literally a huge processing computer, powerful processing system. And what they do is they solve these complex puzzles, algorithms, hashes that basically have the transaction encoded in them. So whoever has the most processing power, whoever's mining rig is the most powerful. So if me, AJ, Sahib, and Tivo all have mining rigs, and mine is the most powerful, I got the best graphics card, the best this and that, I'm going to be able to solve the transaction the fastest. And basically, I write that block to the blockchain. So whatever data was sent, it came to all of us. I was quick enough. And for me being quick enough and writing that block to the blockchain, I'm rewarded Bitcoin. So that's why I call it mining for Bitcoin. So the first miner who wins gets paid. And obviously, this creates a decentralized network because all of us are mining, not one of us control it. But the downside to this is, let's say I want to cheat and I want 2 miners, or I want 3, or I want 1,000, and they're called mining farms, crypto farms. And I get all these rigs and I have all this huge warehouse full of mining rigs. I now control more than just one node on that blockchain network. So I have more control, and I'm more likely to be able to write bad actors to the network because I'm more likely to solve the puzzle first because I have more processing power. And now, if you have more than 51% of the network, you can really hack the blockchain. However, it's kind of difficult, but what they have these days is called mining pools. So that's like me saying, I'm gonna get all my rigs, I'm gonna get all AJ's rigs, Sahib's rigs, and Tivo's, and we're all gonna put them together. And when we put all our rigs together, we call it a mining pool. So all of us now are competing together, and that gives us even more share of the blockchain of those nodes. So if we have more than 51%, it's no longer decentralized because we could write a bad block and there's nothing no one could do about it. So to try to solve this issue, they came up with what is proof of stake. So proof of stake isn't whoever's processing power is the fastest gets to validate the node or validate the block. It's whoever has the most stake. So basically the richest, whoever has the most Ethereum, Ethereum is a proof of stake protocol, right? Whoever has the most Ethereum in the pool, they get to go first. And then the algorithm just chooses based on, oh, you got 100, oh, you got 1,000, you have however much, that's how they choose. But in this time, having the most money doesn't mean that you just get to write a block and make some money. You get to make the money off of the transaction fee from the block being minted onto the blockchain. This is what you know as Ethereum gas fees. And if you've ever tried to send anything on Ethereum, you know, like, oh no, this ain't it. Because the gas fees most of the time cost more than the actual whatever you're buying or whatever you're sending. So like one time I was trying to buy an NFT on Ethereum, and it was like 0.05 ETH, right? The gas fee was like 0.1 ETH. So it was costing me like $500 to buy something that was $100. It just didn't make sense. So a lot of people didn't like this for this reason, and they moved away from Ethereum. And Ethereum does have ETH 2.0 that's supposedly coming out. It's supposed to come out in July of 2021. We still haven't seen it. And it would make these gas fees less. But if you're mining ETH, that's how you get paid, right? So, and then let's say you, in order to make this more centralized, kind of like Bitcoin, if you owned a whole bunch of rigs and you had 51%, you'd have to own 51% of all Ethereum out there to be able to write a bad block to the blockchain. And now that's a lot of money. That's like billions and billions of dollars. Most people don't have that. And if you do, you're probably not trying to hack the Ethereum blockchain, right? But in order to combat this, so transaction times take a little bit longer and the gas fees are higher. But in order to combat this, you have proof of history. So if you play this video, it'll explain kind of a simple version of proof of history. Can y'all hear it?
No,
I don't think so.
Sound.
Yeah, I don't think I can hear the sound.
Can't hear it. Let's make sure that
Is your computer sound up?
Yeah, let me double check that. Share sound. Okay, let me know if you guys can hear now.
Order again.
Yeah.
There we go.
Yeah.
Proof of history enables the blockchain to work fast while maintaining security and decentralization. Here's an analogy. If snapshots of dye diffusion were scrambled, you would know how to place the resulting images in order again because of the laws of entropy as a function of time. Proof of history uses a recursive verifiable delay function to hash incoming events and transactions. Every event has a unique hash and count along this data structure as a function of real time. This information tells us what event had to come before another, almost like a cryptographic timestamp, giving us a verifiable ordering of events as a function of time. Each node gets a cryptographic clock that helps the network agree on time and ordering of events without having to wait to hear from other nodes. Unlike slower, traditional blockchains, oftentimes throttled by various consensus mechanisms, Solana achieves high throughput without sacrificing network security. Visit Solana.com to learn more.
So if you've ever heard of Solana, you might know of it as what Cardano is supposed to do, and that is some shade because I do not like Cardano. They don't have a real product. But Solana uses proof of history and proof of stake, right? So that mechanism that was just explained, it is basically, it uses the proof of history in order to validate the blocks quicker. So instead of your Ethereum, where it's coming in, okay, we're going to assign it over here, the algorithm assigns it to whoever has the highest stake, they validate it, boom, next block. Solana is like, we already know where all the blocks are coming in and how fast they're coming in. We just gonna go ahead and validate them. So the gas fees are way cheaper, and it uses proof of stake based on, so if you've ever heard of staking your crypto, so the gas fees are a lot cheaper and it's a lot faster. So it's kind of a more seamless network, and it kind of solves the whole centralized aspect of things, even though people will say like it's a little more centralized because of proof of history. But proof of history is a relatively new concept, and you won't see a whole lot of, just lag time, or maybe as of right now, there has been some network congestion, but it's still in its infancy stages. And I think, Solana will be a great blockchain of the future. But so now that you know kind of how blockchains work, what are their use cases? Like, cool, this network is over here, but how can I use it? So obviously payment processing and transferring money. So if I want to send some money to AJ, girl, what's your wallet address? I can send it, boom, boom, quick. And I don't have to worry about Bank of America or whoever you bank with and waiting on them to wire some money over here. It takes 6 hours, or pay a fee to wire some money. Or if I wanted to send money to someone in a different country, I don't have to wait on Western Union or pay a $17 fee or whatever money transfer system. I can just send it straight from my phone to their phone over the blockchain, and it's verifiable and it's there forever, right? Another case is digital identification. So the scammers is always on Jolene's case. They always trying to be Jolene on Instagram, right? So let's say Jolene is like, you know what, I'm done with Instagram. I'm moving to a social media that's on the blockchain. You can't pretend to be somebody on the blockchain that you're not, because that record, that transaction that you created that account and then that's you, it can't be duplicated. It can't be replicated. So there's only going to be one Jolene GC, and that's her digital ID on the blockchain, and the blockchain verifies that. Can't be tampered with, right? So that would solve a lot of her problems, amongst other people that are super, super popping on social media. And then you have copyrights and royalties. So if I wanted to, put out a song, if I made music, I put it on a blockchain. If every person that buys it off that blockchain or obtains it, I can get a piece of that. I can get a royalty from that. And it's copywritten because it's on the blockchain. There's only one. It can't be duplicated, right? Real estate, land and auto sales, private escrow, things like you need a person, like you don't have to go to the UPS store and get a notary right now, right? You can literally just do it over the blockchain through a smart contract, and you'll be able to transfer your title or transfer the money and the title all in one transaction, and it's verified on the blockchain. It's not verified at the DMV. It's on a blockchain. Trading stocks, maybe one day. Not anytime soon, but the technology is advancing to where it could be capable of keeping records of, I bought this then, I'm selling this now, and that type of deal. And then managing the Internet of Things, also known as IoT. So if you are, if you get a smart fridge, everything is smart these days, right? So if you get a smart fridge, you get a smart house, you get a smart lock, whatever. Let's say that you don't want somebody's random smart device coming on your network. The blockchain can verify that that is the correct device coming onto your network and not a bad actor or a hacker or a threat, right? So if I have a smart fridge and it's connected to my network, but then another random smart fridge that looks real similar tries to connect to my network, that's not the same fridge. The blockchain is going to let me know that. So it can be used for security purposes too. So let's talk about the metaverse. And everybody always asks this too. How can I get into the metaverse? What metaverse are you in? Like, metaverse isn't one place. That's what most people don't realize. It's not like I'm about to tap into the metaverse, y'all pull up. No, it's not just one place. The metaverse really stands for the merging of the physical world with the virtual world. So it's changing the way that we interact with technology and interact with people through technology. So right now we're on Web 2.0, we're on Zoom. But if we were to go into the metaverse, we might put on these goggles right here and we can go and all feel like we're sitting down together, not just broadcasting it out, right? So obviously this can be done through goggles, like I just said, virtual goggles, Oculus, or augmented reality glasses, which we may see soon from Apple. So let's talk about Facebook and let's talk about those goggles. So Facebook changed their name to Meta. This had people, going crazy in the market. The whole market was like, it felt like the market was focused on buy now, pay later. So Afterpay was going crazy. All those stocks were going crazy. And then all of a sudden it was a metaverse. Like every metaverse stock was hot and Nvidia was going crazy. Anything that had to do with metaverse, virtual reality, that was going up for no reason, right? You saw a metaverse ETF get created. And I was reading about Facebook and their name change, and their goal is still the same, right? It's always been to connect people. So when we got on Facebook, on the internet regularly, we were connecting with our friends, our family, maybe people you didn't know. You was just friending anybody back in the day, trying to get a lot of friends. And you were connecting with them in a new way. You weren't having to get on the phone and call them. You weren't having to go see them in person. But now it's getting even more like you're gonna be able to see them and not really be with them. So they're doing this through goggles like the Oculus that I just showed, holograms, augmented reality, art. So let's say that we're walking down some fancy building way, right? Some fancy place in New York City, and it's these beautiful buildings. And let's say there's an artist and they want to have their graffiti on the buildings. But obviously the owners are like, you're not about to do that on my building, right? So in augmented reality, you can still have your art in real life, but it's not actually there. So you put on your VR goggles or your AR glasses, you put on your glasses and you can see the building and you can see the art that the artist has created. And it's not actually there, but you can still see it. So you're still sharing the art on the building, but you haven't actually defaced anything. And then obviously there's comfort. So let's say you're in the army and you're on a deployment somewhere overseas in Pakistan or something, and you want to feel like you're at home. You can put on your virtual reality goggles and go to a place that makes you at ease. You can go to a beach. You can go to just escape from where your reality is and feel comfortable. And then obviously fun, video games. I know y'all have seen somebody's uncle with the goggles on, hitting a wall, trying to play boxing or, something crazy. So fun is also a part of it too, but it's just changing the way that we connect. And then you have crypto metaverses. So these are metaverses that are built on the blockchain, right? And one of the most popular ones is called Decentraland. Started in 2015, and it was 2D back in the day. They called it the Stone Age, which is fitting, right? Because the Flintstones, it's like they were 2D. Now it's 3D, fully 3D virtual world, and it's built on Ethereum. So it's governed by what's called a DAO, a DAO, a decentralized autonomous organization. And basically you can buy land, you can build stuff, you can think of it as playing Minecraft, but you own everything. And you're actually using real money to purchase them, right? You can use real money to purchase things in Minecraft, but let's say Minecraft decides they're shutting down. You can't play Minecraft anymore. Decentraland isn't shutting down because it's on the blockchain. It's there forever. You own that. If you buy that piece of land, you own it. If you build something in Minecraft, you don't own that. If Minecraft wants to ban you and say you can never play again, they can do that. but not on Decentraland. And then they have a token called Mana, M-A-N-A, or Mana, however you want to pronounce it. And that basically fuels the Decentraland economy. So I first got put on Mana in like March of 2021, and it was like 90 cents, I think. And then it ran to like $3, $4, and I was like, why didn't I buy more? But it essentially powers this economy. So as more people move to play this game, those tokens will continue to rise, and the utility value of them goes up because you're literally in a world that you own and it's not going anywhere, and you have ownership. So everyone always wants to know, how do you invest in Web3? How do you invest in NFTs? And I'm gonna let Sahid take it over and give you the tea.
Sure thing. Thanks, Lex. So starting off with stocks, how can we invest in the metaverse? As Lex previously mentioned, Roundhill Ball created this ETF called Meta. Although just recently read an article that their ticker symbol is actually being changed to METV. So just keep that in mind if you are investing or holding shares of it by January 31st. They didn't specify why, but my assumption is Facebook probably asked or paid for the rights to probably have the Meta ticker in the future. And that's probably why you haven't seen Facebook's ticker change to Embers yet. So this is Meta in the top 10 holdings. They have really good companies in there, all related to different associations with the metaverse. So some good stocks that I wanted to list that would be a good investment into the metaverse is starting with the infrastructure layer. You have, stocks like chip makers like NVIDIA and AMD, and as well as Cloudflare, which would be set up the infrastructure for Ethereum and many of these blockchains. Then you have some gaming and engine platforms such as Unity, Roblox, and now, as we know, Microsoft, which is a huge player in this as well. As we know, they recently acquired Activision. Some content users, platforms, a lot of them are social media companies, and things like we said, Meta, C Limited, Snap, and Tennyson. Now, some people might ask, this is a little bit too confusing. There's so many cryptocurrencies, so many altcoins. How do we invest in the metaverse? Kind of like we do with ETFs. Well, the good news is we have crypto metaverse indexes, and although it's pretty early on, it's a little bit difficult to invest in them without using a DEX, which is a decentralized exchange. And as you can see on this screenshot on the right, this is essentially SushiSwap. And what you need to do in order to get this metaverse index, which you can see has about 10 to 15 different blockchains in it, you have to swap a token, it could be Ethereum, into this metaverse index. So this will usually have a gas fee, and gas fees are a little bit tricky. So we're not at the point yet where you can kind of automate it to such a way where you can dollar cost average, how we might do in M1 Finance. So this is still feasible, but probably just in bigger, large buys. So metaverse index, MVI, that's the first ticker. And then the second one, we have another index you can invest in through the DEXs and swapping is Play. And similar thing, you can get it on PiDAO. You can buy and sell from the exchange and swap for that. And here are the holdings for that. This is a cheaper one. So going to NFTs and their use cases. Building off what Lex has told us about DAOs and blockchains, NFTs kind of include all these things. You'll see an overarching theme about cryptocurrency and blockchains is all of it is interconnected. And so NFTs, like our cousins earlier mentioned in the Cryptocurrencies Basics Supplemental Sunday, is a non-fungible token that's a unique, non-replaceable asset that can't be replicated on the blockchain. Think of it as a sort of a digital passport. And essentially, this allows you to have permanent and transparent ownership of your digital assets. A good example of this would be a fungible token is a dollar bill, like a $1 bill. There's billions of these dollar bills, and they serve the same purpose versus a Mona Lisa, which is a one of a kind, and that would be a non-fungible asset. Typically, non-fungible assets are more valuable because they're one of a kind and can't be replicated. So current use cases for NFTs, we have things like in-game property, as Lex mentioned with Mena, using the tokens to buy collectibles and items in Decentraland. You have IAM, basically identity access management, collectibles, art, and music NFTs. And so some potential use cases, because right now we're kind of in the early stages of NFTs. A lot of it has gained popularity through, maybe the famous ones you might have heard on OpenSea, like such as CryptoPunks and Bored Ape Yacht Club. So now we want to see, although NFTs have started out as as collectibles, like through NBA Top Shot and these art pieces, NFTs as a technology is changing how we validate and verify things. And it kind of cuts out intermediaries that you would normally need to do a lot of these processes. So what you'll see is the potential is really big. And some use cases for that would be authentication, tokenization, ledger and record keeping, intellectual property and patents such as real estate, and then gaming as well as voting. And the screenshot included at the bottom here is from Dune Analytics. It's a really good site that keeps track of just daily volume through NFTs. And so OpenSea is one of the largest marketplaces for NFTs right now. And as you can see, August, we kind of peaked and had about $3.8 billion worth of US dollars worth of sales in NFTs. And just in this month alone, actually, January has a record high sales of NFT volume. So although you might have noticed the cryptocurrency markets are down, the regular stock markets are down, NFT volume and interest has peaked right now. So first use cases that we're currently using, I wanted to go through were with property and identity access management. Right now, you have the ability to create your own ENS, which is essentially like your name tag, your address, your identifier in the Ethereum blockchain. And it's pretty simple to use. You'll see that as long as it's available and there's only one of a kind, you're able to register it and you have to pay a small fee, a gas fee to obtain it. You'll notice that a lot of the popular names such as Tesla, Microsoft, Visa, Nike, these will be taken and people will try to sell these NFTs on the marketplace for really, really high amounts of ETH because they're valuable. And as you can see later on, what I'll show you through applications we've seen so far with cryptocurrency and NFTs, a lot of these big brands are entering the space now. So they'll want to have their brand represented through all these addresses and having the proper names and correct validations. So yeah, in Web3, you're able to own your own identity. That's the difference, but we're able to own our own digital assets. It's not just we're using Twitter and we don't have control of the accounts, or we're playing Minecraft and Roblox, but we don't have control of the outside of the game. So through smart contracts, you're able to control who you share your data with and even get paid each time your data transfers from one entity to another. And it also provides full visibility into who has access and where your data goes. And as we know nowadays, there's a common saying that data is like the new oil. So when given access to our own data, we have plenty of opportunities of what we can do with it. And the screenshot up above you see is actually a picture of Decentraland. I was able to go in there today, and the robe I got is from the Wealth Squad, which basically created their own NFT wearable in this universe, and it gives you access to like a community you have the ability to sell it as an NFT, and it's a limited supply. So art and music, this is one of my favorite use cases for NFTs. And recently, I think in October, there's a DAO that got pretty popular for selling and basically minting the NFT version of the Doge meme. And so they've garnered a lot of reputation and money and have used their popularity to actually rescue the $4 million worth never released single edition Wu-Tang album, Once Upon a Time in Shaolin. And so what happened was, you might have known Martin Shkreli. He was a famous hedge fund guy who used to short a lot of biotech companies, owned this. He bought this album from Wu-Tang for about $2 million and basically was in jail for fraud. And so this album hadn't been open to the public all this time. No one had access to it. And unfortunately, the way they set up the contract, there's no public release allowed on this album until 2103. But what's really cool is Pleaser DAO saw this as an opportunity to be able to try to buy the NFT, the album from Martin Shkreli in hopes of minting it into an NFT. And so what they were trying to do here was take a digital product and attach it to something physical, like the album. And what's nice about this is with the DAOs are usually a group of people that have some sort of ownership through a token. And so once they're able to purchase this the album from Martin Shkreli and mint it into an NFT, it gave the users of the DAO the ability to have listening parties, which were actually allowed through the contract for the album. So this kind of gave a once in a lifetime kind of opportunity where we wouldn't be able to hear this this music release for another 100 years, have access to it now if you're part of that DAO. So that was a beautiful thing that happened. And another example of how NFTs and music have been used lately was through Nas. He recently teamed up with a local startup called Royal Music. And essentially what they do is mint some of your music into NFTs that you can sell to your consumers, your fans. And what Nas did was essentially keep 50% of the royalties to himself and give out 50% of the royalties to the buyers of the NFT with different tier systems. So depending on how much of the NFT, which tier you would like to buy, you get access to many parts of you get access to 2 VIP concert tickets, exclusive signed vinyl from him, a video conference from him. And what's really, really groundbreaking with being able to purchase an NFT from an artist and gain these access and rights is you can take something like an artist who's about to have his come up, someone you really believe in, invest in them through their music, through their NFTs, and watch as they rise in popularity and become successful. You're not only supporting them, but you're able to basically earn value out of it yourself too. It kind of puts value in understanding and keeping up with the culture and what music you like and what's prominent right now. So what the future holds. Like I previously mentioned, NFTs are still new and we're still seeing more and more use cases come out through them. And so one of them would be real estate, which would be really nice because you're able to mint a token to the deed of a house and then essentially use that as a way to cut out any intermediaries that you normally have to do with all the paperwork of selling real estate. And I'm going to let Mr. Wonderful, Kevin O'Leary from Shark Tank, explain another use case of NFTs.
The idea, and let's take a physical asset. The one I like to use as an example is watches. I'm a huge watch collector. I have a massive collection of watches. One of the biggest challenges I have is inventory management, insurance management, and then of course, authentication. When people offer me vintage watches, I have to go through a very arduous authentication process to know if it's fake or not. There's so many fake watches in the market. NFTs could solve all of those problems. So in the case, a use case for the multi-billion-dollar watch industry, because the actual trading of secondhand watches is 10 times the size of the original watch market each year, because there's billions of dollars worth of very desirable watches that trade all around the world. If I could turn all of my watches into NFTs, and in that way I could let my insurance company know, look, these are the 10 that are out of the vault this week. Bid me on insurance just for these 10. Here's where they're located. Here's why I want them insured. And all the rest I'd self-insure because they're in a bank vault in some city somewhere. Authentication. Every time I sell that watch, the scan of its dial, which is down at the micron level attached to the NFT, would authenticate it. You could rescan it and prove that it was the original watch. So for that kind of thing, same with real estate, same with fine jewelry, same with pens, same with cars, all of this is going to move onto the chain. And so the best way to invest in it, from my point of view, is take positions like I invested in Mutable.com. They own NFT.com. They're building a curation platform for NFTs everywhere. And so that's an equity that I own. I own Wonderfi.com, which is just bought.
Can't hear you, bro.
Yeah, I was about to say, is it just me?
Sorry.
Sorry.
Thanks for letting me know. Yeah. As you saw through the video with Kevin O'Leary, he explained really well how we can take kind of unique high value assets like watches or paintings, etc., and tie them to NFTs, which make them a lot easier to track, a lot easier to deal with insurance, a lot easier to transact to other people. Because once again, once you have minted it onto the ledger, there's always going to be a record of it. So you always know where it is. And the beautiful thing about blockchain and NFTs is it's basically an autonomous software that's always running and always able to see, okay, where does this belong to now? The person who wants to buy this, can we verify that they have enough Ethereum or whatever currency that's being exchanged for the asset? Can they actually buy it? And so it takes care of a lot of the issues and challenges that you normally face with rare collectibles. So mainstream integration. This is funny because a lot of these screenshots you see here were within the last 1 to 2 weeks, just coming through the news. We saw that Twitter introduced NFT profiles. Facebook is looking to get into the NFTs now, as well as minting them, but also having them attached to their profiles, and maybe probably adding like a collection page. You might see that on Instagram as well. And what's really nice about this, like Lex had mentioned before, it goes back to having your own identity, right? It's really, really hard to get a blue check mark on Twitter. And we see a lot of frauds come up, a lot of frauds, fraudulent accounts. So what's nice about NFTs is once you are able to own your own piece and attach it to your own account, there'll always be a way to kind of direct you back to, okay, can I verify through their address that this is actually them? So that's one component there that, you know, the social media companies are stepping in right now. So that's going to drive a lot of mainstream attention towards NFTs. Another thing is Walmart. Walmart mentioned they're also trying to look into cryptocurrencies and NFTs. And one thing I'd like to point out that's really interesting, you see a lot of retailers getting into cryptocurrencies, a lot of retailers getting the NFTs. You might think, why is that, right? So during the pandemic, during supply constraints and shortages, it's really hard to run these physical businesses. There's a lot of costs associated with it, and they might be losing money in some areas and with physical stores and whatnot. But with NFTs, they already have established brand. They can create something that doesn't have any, you know, storage costs, no inventory costs. So you'll see a lot of these retailers, they're the ones who are really trying to push forward into this NFT space, because for them, it's easy money. They're a recognized brand, and they don't have to worry about all those costs that they normally deal with in their day-to-day physical businesses. Another interesting collaboration that happened was with Adidas. Adidas entered the NFT space in such a way, like we were explaining before, once these NFTs are created, it's not just a high value asset, or some of them are just, you know, a quick flip. These are brands on their own, and it's not just like any kind of thing. They're becoming their own companies. CryptoPunks and Bored Ape Yacht Club are some of the biggest, people call them blue chip NFTs, and they're just made up of everyday people that essentially get to decide and vote as a DAO on what decisions get made, what kind of moves do they make, and a lot of these NFT collections are even getting a lot of venture capital backing. They're getting these collaborations with real brands. So it's only propelling their brands forward as well. And what you're seeing is these top companies like Adidas and Nike, who will they go to when they want to launch their own platforms? They'll go to the people that are already at the top of the NFT brands. And that's exactly what we see here with the Adidas and Bored Ape Yacht Club collab. And they pretty much launched their first phase out of 4 phases of their NFTs collection. And this, I believe, started around 0.2 ETH, and it's already selling around for 1 to 1.4 ETH. And what's really cool is they're trying to make it not just a piece of history and something that, you know, this is their first time entering the space, but you're actually getting a physical goods attached to it as well. So anyone who owns this NFT gets 4 basically limited edition clothing pieces that will be sent to them for free throughout the year of 2022. And as we know, with anything from like Nike and Adidas, if it's limited edition, those things could resell already by themselves for $1,000, $2,000. So had you paid 0.2 ETH, which might be, you know, $500-600 of a premium, you're already getting way more value through just holding the NFT. You're able to resell that as well. But through the actual airdrops or other rewards that are given to the NFT holders. And then so another thing is Nike. Nike actually acquired this company called RTFKT. And what they do is their whole platform is built around creating digital products, digital shoes that are used in the metaverse through these different games. And so Nike said, outright, we want to acquire this company that's creating them for us, so we can get a head start. We already know what else are they doing. They made a Nike Land with Roblox. So very, very soon you can kind of see all the pieces tying together, as Mark mentioned before. When you can look at what a company's acquisitions they're doing, you can kind of get a good idea of what direction they're headed and what they're trying to release. So be on the lookout for what Roblox might be doing with Nike, how they will be entering the metaverse space through NFTs. Then lastly, I have over here is StockX. StockX, as you might know, has become really popular over the last few years as being like a better eBay to get access to anything from clothing, shoes, whatnot. So they're creating their own NFTs as well. And this is something I think a lot of people probably had seen coming, where, okay, how do we separate fakes from the real? Authentication. So when you get real sneakers, Nike sneakers, Jordans, whatever, etc. StockX is basically trying to create NFTs associated to each of these products and hold them for you, and have an easier way to handle them, to transact them, to own them. And they'll keep basically the physical product in a safe storage. And with the NFT, you're able to change hands of ownership much easier. And when you want to actually, get the physical product, they'll send it to you, no problem. So blockchain gaming, this is another big theme that's emerging. It's still very, very early on for blockchain gaming. I'm just going to read some key statistics from a report that I gathered from I think it's called Blockchain Gaming Alliance, a really good research company that wrote a 2021 report on this. All the resources will be included in the last page of slides. So you'll be able to see a lot of these good VC reports that were written about NFTs and blockchain gaming, etc. So definitely take a look at that once we're finished. So key statistics, this is from data collected from January 1st. The game footprint has become more visible in NFTs. And this has generated around $2.3 billion in sales just Q3 alone, representing 22% of all the NFT trading volume industry-wide. So a fifth of the trading volume of NFTs is actually through gaming. And that's why you see a lot of these indexes that I showed previously that you can invest in. Majority of them are gaming cryptocurrencies or gaming and tokens, essentially. The number of wallets related to gaming activity increased by 2,400% from 29,563 during the first week of 2021 to 750,000 in Q3 of 2021. It's so funny because I remember growing up playing video games. My parents would always yell at me to say, "Saib, what are you doing? You're just wasting your life playing video games. It's not like you can get a job out of this. It's not like you can make money out of this." And now here we are in the future where all of our generations, all of our kids are growing up on games like Roblox and Minecraft, and they really associate that as a part of their own identity. And so their digital identity has value, and all the in-game collectibles and wearables they have is a part of their value as well. So with these blockchain games, not only can they own their assets, but they can hold on to value for those, and even play to earn, as we'll look through later in the report, how they can just earn money from just playing the game. So many things have changed through, and this is only possible through these cryptocurrencies. Axie Infinity, so they dominate the blockchain gaming NFT volume for the first half of the year, reaching a record high of $2.5 billion in trading volume in September and surpassing sales of NBA Top Shot and CryptoPunks. That's no joke, because I know that the LeBron James NBA Top Shot, I think it's sold around for like $60 to $80 million. So, it's not just one niche area. You're starting to see that's trickling down through sports, through gaming, through a lot of different areas. The Wax blockchain experienced the most new user adoption, with the number of active wallets growing 1,000% on a quarter-to-quarter basis. This was led in sales by Alien Worlds, which saw more than 2 million transactions in the second quarter. So all in all, these statistics are showing that a lot of these very small cap gaming companies, gaming blockchains are growing at a very rapid pace. And this is always something I think on your own time, we should definitely do the research and try to find, what blockchains will benefit, which new gaming entities are entering the space. Maybe even look at like old legacy companies, and how they're doing these partnerships with these NFTs and these collections, and maybe they'll have a future game themselves. So it's a good investment opportunity. And so why blockchain for gaming? 85% of survey respondents agree that asset ownership is the most important advantage of blockchain games, as the technology delivers digital property rights and allows players to have true ownership of their in-game assets. Like I said earlier, it's all about having actual ownership of our data, which is our oil. And yeah. This was the 2021 consumer update from that same report. It just highlights a few things here. A total of 2.5 million unique active wallets were connected to blockchain apps, DApps, decentralized apps, on a daily average, making blockchain games responsible for half of all blockchain usage. So that's no joke at all, that half of the blockchain's usage is actually just through connecting to these decentralized apps for gaming. Kind of emphasizes how large the gaming plays in the blockchain. Metaverse related activity exploded during the first half of 2021, fueled by virtual land sales that hit $42.6 million of growth. Another cool thing about like these land spaces in Decentraland, people are using it for all kinds of things. I've heard of brands like Chipotle and Domino's buying plots of land in the game and essentially creating their own like virtual store where you can order Chipotle, order pizza online, and have it sent to your house while you're playing the game. Blockchain metaverses and play to earn were two of the most talked about topics in Asia region, growing 33% month over month, while reaching 1.7 million mentions across the Asian media outlets. And that's something you'll see right now. Within the last month, a lot of the NFT volume and cryptocurrency traffic has been coming from countries in Asia. So definitely be on the lookout on that. And that's why I'm definitely going to be keeping an eye out on Tennyson and C Limited. The metaverse trend is dominated by the US. However, the Asia presence, like I said, is becoming more visible, with India, Singapore, and Indonesia increasing their audience by 500%. So think about, what kind of companies are there and stand to benefit. The migration of Axie Infinity from Ethereum to the Ronin sidechain helped Ronin become the #1 blockchain platform in NFT trading volume in June 2021. Ronin processed $124.2 million in gaming NFT transactions versus Ethereum's $16 million. So I know Ethereum is still kind of king when it comes to transaction volume and money, but that doesn't mean it's the only protocol that will win. This is kind of a, think of it even just like as a sector, like how chips, semiconductors are doing really well, or cybersecurity as a whole sector is really doing well. There won't be just one winner takes all. I think this is a space where many different blockchains will benefit and be able to take a piece of the pie. And right here on the right is this Louis the Game. This was actually came out early on in 2021. It's essentially Louis Vuitton created their own game to celebrate their 200-year anniversary to their founder, and they created this game kind of like Zelda Breath of the Wild, if anyone has played, and you're just going around trying to collect these collectibles. But what's interesting is by playing this game, like a play to earn, you had the ability to there's 30 embedded NFTs throughout the game. So if you're able to find them, these NFTs, by the way, were created by the artist Beeple. And Beeple is a really, really successful artist that made hundreds of millions from selling his artwork through NFTs. So here's a checklist when you're entering NFTs in general. Starting with fundamentals, I would say #1, you have to ask yourself the question, are you looking just for a quick flip, or are you looking to support the community and project that's there? There's so many different kinds of projects being made every single day on the blockchain. So it's on us to do the research and due diligence and understand, does this have long-term value? #2, are the project team members reputable in docs? This is a really important thing to take a look at, because a lot of these NFTs, like someone might make a profile picture NFT that just looks like a monkey, it looks like a Bored Ape Yacht Club, but really you might not even know, do the team members, are they VC backed? Do they have a LinkedIn profile? What is their history with decentralization, blockchain, and development? These are things you want to know. What funding and backing has the project NFT received? Like I said, things like Bored Ape Yacht Club have tons of funding, and it only increases in the past few months, and all the projects they're doing, they keep expanding. Utility is very key. Without utility, you'll see these NFTs won't do that well. Like CryptoPunks is really up there because of it's kind of has a history aspect to it, where it was one of the first. But actually, what happened was you saw almost Bored Ape Yacht Club surpassing the value of these CryptoPunks, because CryptoPunks were not doing much in terms of innovating and growing their community, and coming out with new things as games. The roadmaps are really essential. Just how we have like a fundamental thesis and long-term thesis of a company, we want to be looking at a project and or collections roadmap and see what the team has kind of laid out. Is it clear? Does it make sense? Are they on track with what they said they were going to do? Community and engagement. This is really, really important. Without a community, the NFT means nothing. Like, it was because Pleaser DAO had such a big community that was for and were avid music lovers that they were able to acquire that album Once Upon a Time in Shaolin by Wu-Tang Clan. And just recently, I think the Nelk Boys, a really popular like social media group, they within 1 or 2 days, they created an NFT in a Discord server, which gained about like 300,000 people in their Discord just within a day. Because they have such a strong community, they were able to penetrate this NFT space and sell out all their NFTs in less than a minute. They crashed their own website. 7, innovation and production quality. This matters. If the project hasn't spent the time or money to create something good, people won't want it. And this is just a few tips I wanted to share regarding like actually minting. If you choose to mint an NFT and not buy off a secondary marketplace, minting is basically like the opening price when you're able to buy the NFT for the first time. You want to mint at a reasonable price. If the collection is asking to mint for 1 Ethereum or over even 0.2 Ethereum, I would say it's a little overvalued. Unless it's a company like Adidas or something reputable, like those brands, like Adidas did start their NFT mint at 0.2 Ethereum, but usually you'll see 0.07 or 0.08 and below, because you don't want a cash grab. Sadly, the truth is a lot of these NFTs that don't have any backing aren't reputable. Like if you go through the fundamentals and it shows a lot of red flags, it usually is. There's a ton of rug pulls where people will make projects, collect $1 million and just run away. So number 2, limit per transaction or wallet to avoid whales. So in the beginning, because NFTs were really new, they didn't have too many limits. Bored Ape Yacht Club, you were able to do 20, you were able to buy 20 of their Bored Apes per transaction, which is unheard of now, since each of them are like selling for about 86 ETH now. What you want to see is that it's limited to 1 or 2 or below, because people who are already heavily invested in this space, that understand the space, that have a lot of capital, will usually swoop in if they take advantage of a high transaction. Basically, if you see a lot of the collection is owned by one person, it's pretty bad, because as soon as they sell or dump their position, it will kind of crash the project and ruin the community, since there's not that many like variable holders. You want to audit the following of the project, whether that be on Twitter or Discord or Instagram social media pages. Some people will actually pay to buy fake followers, and you want to make sure that the engagement's real. That'll tell you another red flag. Like I said earlier, average wallet ownership. So you can do this by looking at like a collection, and it'll tell you the number of items that are listed for sale, and then how many owners there are. And if you divide the items by the owners, you'll get the number of unique holders. And the higher the unique holders, usually the better it is for the project. Number of collection listed for sale. This is important. In a collection of 5,000, you don't want to see 4,500 on sale. That means people are just not interested in growing the community and holding it for the long term. So a less listed on sale, the better. And that's what you'll see with, Bored Apes and CryptoPunks. Number 6, you can look at volume traded. When there's a high amount of volume traded, that means there's supply. There's a lot of demand for the NFT, which is good. And then another thing you might want to look at is how thin is that secondary market floor. If you see some NFTs listed at 0.5 Ethereum Ethereum, 0.2 Ethereum. It's all over the place. It's likely to not really, nobody's able to get a real good value of what it's worth. So you want to see a project that has a lot of whatever NFTs they have on sale listed around similar prices, like 0.2, 0.21, 0.23. That shows, strong sales and supply and demand. And yeah, these are some exchanges that listed on the bottom here. OpenSea is the most popular, like I mentioned. Then you have things like Rarible. Vive is a really interesting one. It's an app that you can get, and they are pretty much all the DC and Marvel related collectibles. So anything to do with Disney, anything to do with comics, you can get from there. Immutable X, this is a really interesting one because unlike Ethereum, where you have to pay a lot of gas fees when you're buying or minting NFTs, Immutable X has kind of a very low cost NFT platform. Same thing with Solana and SolSea. These are actually NFTs on a different blockchain, which is Solana, which is a lot cheaper. And this Tivo, if you want to mention, he's been promoting a project on Solana as well. That was, I believe, a half Solana, and it went to 1. So maybe you could tell us a little bit about that project.
Yeah. I have been NFTvo the past couple of weeks, but the project is called High Society. So I just been really, before I got into this project, I definitely did a lot of homework on NFTs because I really thought it was like art. Like some people would tell you, oh, it's just like art, you buy it, the value might go up based upon, the demand of it, or people like the art, whatever. But a lot of these NFTs have utility, where you by having that NFT, you can get access to pre-sales or to be whitelisted on other NFTs that are going to come out, or you can stake the NFT and get different coins that you can cash out, or like the Adidas one, he said you have access to exclusive physical apparel. So the project that I was telling y'all about that did mint for half a soul, and it went up to the floor. That's like the minimum price that you could buy the NFT for. It did go up to 1.2. It's back at like 1 right now. So if I cashed out everything, I did double my money in like a week and a half. But it's ran by somebody that I know personally. That's the only reason I bought into it, because like Sahib said, a lot of these projects are what they call rugs, basically just a rug pull where you go, you either mint the project and you don't even get an NFT. They just take your money and it's gone. Or you get an NFT and then the team just stops updating anything about the project and you're holding this worthless NFT now. But this specific NFT, they are a brand called My Tykes that used to do, or still does, like these digital images or cartoons. I don't know if y'all saw mine. They did a custom one for me, but they usually do them for like athletes. So they'll take like moments, or they'll take an athlete and they'll make those digital cartoon-like figures and give them to them or sell them or whatever. And then my friend, his luxury bag brand, it's like a luxury leather bag. So instead of having like a Dior bag or a Louis bag, he has Prime Society bags, and he sells them a lot to athletes and stuff. So they merged, not merged, but they did a collaboration NFT where basically you have the actual art, which is, there ain't no monkeys, there ain't no, a lot of these other animals and stuff that a lot of these NFTs are that I'm not really interested in. It's more like culture appropriate, where they might have some J's on, they might have a cap on, they might have a crossbody on, or a Gucci puffer. I got one with a do-rag and a Gucci puffer on, more culturally relevant stuff. But also you have access in the future to where, like, 3 days after we bought the NFTs, for every NFT that you bought, they airdropped us another NFT, which is like a digital card. where in the future we can burn those cards and they might send us some merch. They might send us a Prime Society bag, which is worth like $300. They might send us a High Society hoodie, you know, in real life, that you might have access to go to a Rams game using that NFT card, because the people that are behind the project have access to these athletes, they have access to these luxury goods, they have access to a lot of different things that I don't have access to. I can't just go to a Rams game, you know, just off the strength, you feel me? But they have access to be able to do that. So for instance, last Sunday, when they had the game at SoFi, they did a giveaway. They said, hey, whoever buys 3 tykes in the next hour, you'll enter into a giveaway to go to the Rams game tonight, a playoff game at that. That's very expensive. And if you're not in LA, we'll cash out the tickets and just send you the bread. So you want to be in projects that do stuff like that, that bring real world utility to you. So it's not just some digital image that you're holding and just hoping to go up in value. You typically good projects are going to provide you value and essentially give you your money back through perks and benefits in the future. And another thing, they gave us access to be whitelisted on another project where the whitelist on that project was like 0.03 SOL. It was like nothing. And then I woke up today, the floor was at 1 SOL. So I could have just cashed that out. And, you know, I've already made money on something that I didn't even have to pay for just by owning this NFT and paying attention to the Discord. So these are the kind of things that I'm learning about NFTs that I didn't know before, even like the Bored Ape Yacht Club, those monkeys that are selling, you know, to celebrities now for $500,000 and stuff like that. There's a lot of benefits and additional perks that come from owning those NFTs rather than it just being some expensive digital asset. So definitely do your homework, do some research on DAOs for sure, because those are very important. If you want to get into high society, it is still at a lower price, especially with SOL being so low right now. I think the floor at this very moment is like 1.1. I can help you set up a Phantom wallet, because you will have to set up a Phantom wallet to be able to buy the NFTs, which is actually like a Google Chrome extension. It's not on mobile yet. I think they're making a mobile app. They just haven't gotten to it. But yeah, if you guys need assistance with setting this up, I definitely could help out. I could do an IG live to show everybody. I don't know if it's appropriate yet for this like supplemental Sundays, but the basic information is what we want to give y'all so y'all can expand on it. But that's all I really got, Saheed.
Absolutely. Thanks, Tebow. Yeah. And like you mentioned, there's so much utility in all these, some of these NFTs, you know, with Nas, you can go see his concerts with, I forgot the ENS, which is basically just a naming service, getting a name on the Ethereum blockchain, that .eth name. If you had bought it just 2-3 months earlier, they did an airdrop to every single person that had one. And that airdrop was with these ENS tokens, which let you pretty much participate in their DAO. And those ENS tokens on their airdrop were already worth 5 to 7K. And that was per ENS address you had. ENS address were running about $100 to $200 worth of ETH at the time, and they still are. So it just goes to show, when you go and do your research and due diligence and get into these projects early that have value, you could benefit greatly. And that's why you're seeing this huge shift of all these people that have gotten in early and became these whales that have these holders of, like, you know, the Bored Ape Yacht Clubs that, you know, it's like expanding out your network as well. They're in the same communities as Stephen Curry, as all these NBA players, as, you know, actors, other celebrities. So it's a community, and there's a lot of interesting aspects to it. But that's definitely just one of them. And I think T did a good job explaining that. So yeah, this is just a do's and don'ts list for NFTs. I just left this up here. Last thing we wanted to cover was DeFi, because this is also a really big aspect of it. and was covered a little bit briefly in the intro supplemental Sundays. But essentially with DeFi, you're providing an element of trust and transparency, and it's using platforms. These DeFi platforms are using code to program rules for financial services. You don't have to go through a bank anymore, a physical bank that has these locations, and everything has to be done manually through a person. And because of that, it's a lot lower cost to even just hold your money, but also be able to loan it out to others. And you're cutting in that middleman out. So you're able to earn these high interest rates. So I've been playing around a little bit with crypto.com. They have this crypto earn platform. And this is just showing you, they have their own native token called the Crow token. This token was 10-20 cents for better part of 2021. And as they grew their platform more and more, you might have seen even like during NFL playoff games, and they've been having a lot of these crypto.com ads. They recently just purchased a whole stadium and named it after crypto.com stadium. And so after that happened, this token ran up to 90 cents, $1. So there was a 500x for a lot of people. But so their token's really interesting. If you hold a certain amount and stake it, you're able to get a higher interest on any other tokens that you want to stake and do that. But so this is known as CeFi, when you're trying to earn yield through like these platforms such as Celsius, BlockFi, Crypto.com, Nexo, Haru. Stable coins usually give you the highest percent, around 10 to 12%. You could still stake, your Ethereum, Bitcoin, usually around 4 to 6%. Solana, Matic, Polygon's actually quite high as well. It's like 16% if you have a Crow stake going. So it's definitely something to look at. But just be sure to understand how the taxes work and stuff and everything with that. Then there's also earning yield through DeFi protocols by lending out your crypto, providing liquidity, and earning protocol rewards. This is a little different because you're actually using a decentralized app. You're not just using an exchange that's out there. These apps are like Compound, Aave, Yearn, and then Anchor. Anchor is a really interesting one. UST. So there's really two main stablecoins right now, which is USDC and USDT, which is Tether. USDT Tether has a little bit of controversy for the last year or so because they're unaudited, and the people are questioning whether all of their market cap is actually backed by real US dollars. USDC is a little bit better. They've been audited and whatnot. But so UST is from Terra Luna. It's another blockchain, and they're gaining a better reputation because they're able to hold and their value, and they actually have what they say is tied to their UST. So Anchor actually, I think, provides around like a 19.6% interest on it. So that's an interesting one to look at. I have a YouTube video that explains more of that. Compound and Aave. Aave is another just a blockchain that is essentially, its own app. And what's really cool about this, and what you'll see a lot of people don't know, it's kind of what rich people have been doing, wealthy people have been doing for a long time, is they never sell their assets. I think there's a statistic that said like 91% or 89% of all of the stocks are owned by like the top 10 or 1% of the world, like in wealth. And same thing, they never sell their assets because they're always able to just take loans on them and essentially use the loans to pay their expenses without having to basically take that realized gain and pay those capital gains taxes. So same thing with Compound and Aave. What's really cool is a lot of people that might have quite a bit of wealth in their Ethereum or Bitcoin or crypto, they're able to get these loans instantly. You don't have to go through a person. It doesn't matter what you look like, what your credit score is. Within seconds, you can have your collateral, you back up with your own Ethereum and get money instantly. It's just like that. And that's something really interesting to look at because once again, you don't have to sell your cryptocurrency and you're able to take out these real loans and, choose what you want to do with them. So yeah, that concludes our presentation. These are some resources. Like I said, I listed out a few venture capitalist firms that are really heavy in blockchain and cryptocurrency: Fabric Ventures, Canvas Ventures, Electric Capital. Be sure to check out the reports. Electric Capital does like a report almost every year, so I'm sure there will be a 2022 report coming soon. The dev report is really, really interesting. What you'll see is And in this world with the metaverse and blockchains and NFTs, the blockchains that have the most amount of development on it, more developers hired, more people working on it, they're the ones that have been really, really successful this year. Those are the ones that were like Solana, Luna, that have, gained thousands of percents. So interesting thing to see is, which blockchains are actually having work done on them, which are being developed and, are growing. And so, yeah, the Blockchain Alliance Gaming Report, and there's the indexes, you can look at that, DeFi sources, like I mentioned, and yeah. That's all we have.
Excellent job, bro. Thanks to you and Lex. We appreciate y'all coming with a fire presentation tonight.
Definitely appreciate you. This is necessary info, man. I know it can be a lot, but options was a lot. And look at some of y'all now. Some of y'all now asking way better questions, have way more knowledge than you did a year and a half ago when the come up started. So the point of bringing this to the table, even though it's off topic from the stock market, is the fact that it's a lot of money and a lot of benefits in this space that can be missed on just from lack of knowledge. So this is like a seed planted in the ground for you to go water it now. And it could just be little by little. It might just be joining a Discord group. It might just be, watching a couple more YouTube videos or reading some white papers or doing some homework on some VC funds that invest in this specifically, because everything that you don't know is out there. Somebody has already become a millionaire off of your lack of knowledge. You feel me? So just make sure that y'all are doing the homework, because we are going this way. The metaverse is going to happen. Web 3.0 is already happening. Crypto is getting bigger. It's still volatile, but it's only getting more and more bigger and relevant, and more money allocated towards it. So we want y'all to take part in those blessings. That's it. And we definitely thank Lex and Saheed for contributing to y'all's growth and, sparking that, because I see some people was like, man, I've been watching some things and I wasn't really getting it, but this live really helped out. So we definitely appreciate y'all for breaking this down. Y'all did a great job, for real.
Y'all did, for real. But it's already late, so we're not gonna hold y'all too much longer. Oh no, thank you. Thank you, sis. Y'all know how it is sometimes getting the cousins to come on here. So we appreciate y'all preparing this for us and breaking it down, like T said. But in order to not hold y'all any much longer, we'll go ahead and talk about the week ahead. All right. We are going into tech earnings week. I'm slick excited, as y'all can tell. So we got IBM presenting on Monday. Y'all, we got Microsoft, Lockheed Martin, Capital One, Next Era Energy, J&J, all coming in with earnings on Tuesday. Please check out Boeing, Tesla, LRCX. We got Xilinx, all right? Pay attention to that in the AMD deal, right? On Wednesday, we're doing earnings. MasterCard, Apple, Visa, and McDonald's, along with Intel, is on Thursday, okay? And then Caterpillar is going to end the week on Friday this week. So this is the start of Tech Week. We got some of our babies presenting, so I know everybody is going to be on high alert. As far as conferences, to follow up talking about Meta, we have the Games Beat Gaming Summit, all right? Look for Facebook, Meta, and Roblox to come out and speak on any different things that they have coming out the pipeline for this year. Also, any response to they have to Microsoft and the Activision deal. So as you know, we talk about NFT tonight, that's going to be something that we can look forward to, and some news to come out of that. For economics this week, the FMOC 2-day event is this week, all right? So guys, you might see some volatility, okay? So make sure you keep your head on the swivel and you're paying attention to what is going on. That starts on Wednesday. And also the federal funds rate comes out on that Wednesday, okay? GDP and unemployment claims we have on Thursday, and we have the core PCE price index on Friday, all right? So between FMOC on Wednesday and the GDP on Thursday, like I said, it can be a potential volatile week. So make sure you have your plan tight and prepare for price to go either way. But that is the report for this week. I guess we'll say congrats to the Rams before we head out of here. But
Man.
let's just throw that out there, sneak
Oh,
that
baby.
in. But yeah, peace and blessings to all of y'all. We don't need a whole episode. I gave them a shout out, bro. That's all we need. That's it. That's it. That's all we need. We see your background. We saw the kids on IG. Like, bro, we get it.
It was lit. It was lit today for sure, for sure.
I know, you
Lex
could tell I'm a
said
Cowboys hater, huh?
yeah, that's a fact. But you watching like the rest of us, just like Lex, I don't know who city you root for, but y'all all fans now. It's cool. So
Listen to this guy. Listen to this guy.
But
Not
no,
doing this tonight with the family.
did y'all have anything else, Lex or Shahid? Did y'all have anything for the people for this week?
I'm good. Stay safe this week. It is gonna be volatile. Protect your neck, and that's it.
Lex said, look out for that melting butter, huh, Lex?
Period.
If you know, huh?
All I got to say is sorry. If there's any questions, feel free to reach out. I'll try my best to answer. But we got a lot of smart people, like especially the cousins that did the cryptocurrency basics earlier. So feel free to ask questions if anything's confusing.
That's a fact. That's a fact.
Appreciate that.
So yeah, y'all, everything ain't about the stock market and options and all that, but you see sometimes the market can get kind of rough. You feel me? Not saying that the crypto market is any easier, but just the diversification of your money, of your knowledge, of your income, it's good to have those different avenues so you're not all reliant on one XLK call to take you to glory. You feel me? Like it's not always going to be that easy. It can be that easy, but if you get a bad entry and you don't even want to look at your negative 70% every single day, you might have to make other moves just to bring yourself up. You know what I'm saying? So there's other avenues out there that, it's teenagers making millions off of NFTs. It can't be that difficult. We make it more difficult by, being comfortable in our ignorance, but it's really not that difficult once you sit down and you start getting into this stuff. So like Lex said, she said it best. We're gonna leave it at that. Protect your neck, and be safe.